I think the most important factor to understand when investing in a closed-end fund is definitely what is the exposure of that portfolio, the asset class. Are we talking about an equity fund? Are we talking about a muni fund? Are we talking about a high yield, preferred, you name it? That is the number one consideration by far in understanding what risks you're taking with that and the cycle of that asset class. Are we likely at the at rich levels or at cheap levels? That is number one. Number two, for the closed-end fund vehicle in particular, I would say make sure that the investor understands leverage. Many closed-end funds use leverage, and I think that's a fabulous tool that closed-end funds have at their disposal. They do not abuse it at all. There's regulatory limits that they cannot exceed, but it does add some volatility to the net asset value, which is good on the way up, but it's not so good on the way down. So it's clearly something that people need to understand. Perhaps number three is the discount or the premium, which adds an additional layer of confusion for some people. The NAV may have stayed exactly the same, but for whatever reason, maybe one investor was dumping the fund. Closed-end funds do not tend to be very, very liquid. The liquidity of the closed-end fund universe resembles more that of microcap stocks. So people have to be very careful in trading. But there could be somebody who doesn't know how to trade closed-end funds, puts a lot of pressure on the price, and there goes the discount. So one has to be mindful of that and be willing to accept those risks. But those are fabulous opportunities as well. When there's concern about higher rates, whether it's higher long rates that are more likely to affect the NAV or higher short rates, which are likely to affect the dividend because the cost of borrowing goes up higher and therefore the earnings come down, it does create some concern among investors. And given that the closed-end funds are often not that liquid, that could create pressure on the discounts widening. So we sometimes, when there is concern about higher rates, we see historically discounts have widened in the past. But again, that's a great opportunity to take advantage of for those investors who are savvier about closed-end funds. Well, something to keep in mind, not only with munis and MLPs, all MLP closed-end funds are levered, and almost all muni closed-end funds are levered, but I could say the same for preferred funds, for real estate funds, high yield funds, many other asset classes. Interest rates, short rates have been rising. Short rates will impact the cost of borrowing, meaning it will increase, and that will detract from earnings, which may result in dividend cuts. And in fact, we've already been seeing some dividend cuts, and that consequently may impact the discounts, widening of discounts as well.